Do you think it is possible for Tesla stock to double in 2023? The past year has been a rough time for Tesla stock, and many are hoping that 2023 will be different. Even experts have varying opinions about this, with others claiming that Tesla stock will continue to fall, while others argue that it will in fact double. You definitely would not want to miss this info. While we see 2023 as a challenging year for the EV market categorically, we believe Tesla's gap to competition can widen. Morgan Stanley's Jonas has said, in 2023, analysts expect Tesla earnings per share to grow a cooler 40% to $5.66, with sales up 42% to $118.2 billion. Although that's a strong pace, experts believe that the era of triple-digit growth and the idea of unlimited demand that long fueled Tesla stock may be over. Still, Tesla remains the dominant EV maker in the US. Through the first 9 months of 2022, 65% of the 525,000 registered EVs in the US were Tesla vehicles, according to data released in November by S&P Global Mobility. The original Fremont plant has significantly ramped up production. For context, the Fremont factory makes the Model 3 and Model Y, as well as the luxury Model S sedan and Model X SUV. The Fremont factory can produce up to 550,000 Model 3 and Model Y vehicles per year, according to Tesla. It also has the capacity to build up to 100,000 Model S and Model X vehicles. A newer Austin site has a planned capacity of 250,000 vehicles. Tesla Austin is currently ramping up Model Y production, which should help profit margins as the plant nears capacity. Austin is set to make the Cybertruck when that vehicle comes online, perhaps in mid to late 2023. However, the oft-delayed truck isn't expected to be much of a volume contributor this year. Tesla is also finalizing plans to build an auto assembly plant in northeastern Mexico, as Bloomberg reported in late December. Tesla has made a significant etch in the U.S. auto industry because of its EVs. That said, Tesla's U.S. prowess is unquestioned. Today, traditional automaker General Motors is producing the GM Bolt and Bolt EUV in decent numbers, but in price and features, these are sub-Tesla EVs. So is the Volkswagen ID.4, now produced in Tennessee. Other legendary automakers are slowly venturing into the EV space as well. The Ford Mustang Mach-E, Hyundai Ioniq 5, and Kia EV6 are intriguing crossover rivals to the Model Y, but overall volumes are still fairly light. Ford Mach-E production is set to ramp up in 2023, while the moderately priced Fisker FSR Ocean SUV will enter the market. By late 2023, General Motors aims to have several EVs with its new Ultium batteries on the market. Ford is also looking to expand production of the all-electric F-150 Lightning pickup truck to an annual run rate of 150,000 units by fall 2023. Through the end of November, the company sold 13,258 F-150 Lightning units. Multiple price hikes have pushed the entry-level Lightning price to nearly $56,000, up 40% versus the original $39,974. That reflects the Lightning's popularity, but also its scarcity and high cost for batteries. The bottom line is that volume EV production, especially of head-to-head rivals to Tesla vehicles, may not come until 2024 or later. But overall competition to win over American car buyers is expected to heat up. Total U.S. auto production should pick up in 2023 as chip shortages and other supply chain problems wane. Prices of used cars, including Tesla EVs, are coming down. Still, there are high expectations for Tesla sales to rise significantly in the U.S. next year. Experts believe that Tesla should get a boost in 2023 from new EV tax credits of up to $7,500 per vehicle from the Inflationary Reduction Act IRA. Income and vehicle price caps, however, could limit Tesla vehicles and buyer eligibility. The EV credits limit eligible sedans to prices of $55,000 or less, with pickup trucks and SUVs capped at $80,000. Tesla will likely make permanent price cuts in the U.S. to qualify for IRA rebates, Bernstein Sacconaghi wrote. However, it is worth noting that the EV credit only applies to vehicles assembled in North America. That excludes imports such as the Ioniq 5 and EV6. With EV credits looming, many would-be Tesla owners have delayed purchases or taking delivery until 2023. Tesla, on December 21st, began offering a $7,500 credit on Model 3 and Model Y deliveries in the U.S. before the year end. That's up from $3,750 at the beginning of the month. The EV giant also is offering free supercharger miles as another incentive. On the flip side, experts think that while Tesla had a terrible 2022, 2023 might not be any better. The leading EV maker had a rough time on the stock market in 2022, and the pressure keeps building. Competitors are getting better, consumers have less money to spend on vehicles, and Elon Musk is distracted by Twitter. In light of that, many believe that a charismatic CEO is a double-edged sword. While Tesla CEO Elon Musk may be an acclaimed businessman, his recent decision-making skills have greatly altered people's perception of him. Since mid-April 2022, when Musk announced his deal to acquire Twitter, Tesla shares have lost 62% of their value, with much of that decline coming after he had become the leader of the social network. After years of bad results, the plunge in tech stocks that began in November 2021 and Musk's distraction with Twitter finally rewarded those who bet against Tesla stock. According to the Wall Street Journal, in 2022, those traders enjoyed $17 billion in gains. Still, some say that investors need to look beyond the current challenges Tesla is facing and focus on the bigger picture. It is no secret that the stock market slipped into bear territory in 2022 as investors hit the panic button amid surging inflation, rising interest rates, and a chance that the U.S. could sink into a recession. But there are also chances that the new year could witness the arrival of a bull market thanks to cooling inflation, which could lead the Federal Reserve to pivot away from its hawkish stance. As a result, it's possible that stocks could bottom out in the first half of 2023 and finish the year strongly. So, savvy investors have an opportunity to accumulate some solid companies over the next few months that could fly higher. Tesla is one such company that could benefit in the event of a bull market. Its shares have lost 67% over the past year, but consensus estimates suggest that it could run up significantly in the next year. Tesla stock is carrying a median price target of $250 based on a consensus of 36 analysts. That's 121% higher than the electric vehicle EV maker's current stock price. What's more, Tesla has a street-high price target of $436, which could translate into a 286% upside from current levels. It is worth noting that Tesla has been clocking terrific growth quarter after quarter thanks to the healthy demand for its cars. However, the broader stock market sell-off, CEO Elon Musk's acquisition of Twitter, and concerns that demand for Tesla's cars are weakening amid the macroeconomic slowdown have weighed heavily on the company's shares. The company's recent price cuts in China have further dented investor confidence. Still, Tesla is expected to finish 2022 with a 53% jump in revenue to $82.5 billion and a massive 77% increase in earnings to $4 per share. The company is also expected to sustain its impressive levels of growth in 2023 and 2024. The 5-year forecast also looks bright, with Tesla expected to clock nearly 35% annual earnings growth for the next 5 years. There are a couple of reasons why the company could see such eye-popping growth. First, Tesla is a key player in the major EV markets across the globe. The Tesla Model Y and the Model 3 are the top 2 best-selling EVs in Europe. In China, which is the world's largest EV market, accounting for 2/3 of global EV sales, Tesla has an 8% market share. In the US, Tesla controlled an estimated 65% of the EV market in the first 9 months of 2022. Although growing competition from both new and established players is likely to eat into Tesla's share in these markets in the future, investors should note that the company is operating in a market that's built for secular long-term growth. From 2023 to 2028, EV sales are expected to clock a compound annual growth rate of 41%, hitting 148 million in annual shipments at the end of the forecast period. The advantage of being one of the early movers in this space should help the company sustain its momentum despite the growing competition. Another reason why Tesla's outstanding growth is likely to continue is because of the company's expanding product portfolio and production capacity. It has been ramping up production aggressively, and it had an installed annual vehicle capacity of close to 2 million units at the end of the third quarter. The introduction of new products, such as the Cybertruck and the Tesla Semi, means that the company can enter more niches and strengthen its position in the EV market. Overall, the combination of Tesla's solid growth, a potentially more upbeat stock market, and the share's attractive valuation could help this beaten-down electric vehicle company soar big time in the new year and beyond. Make sure to subscribe to this channel for double the Tesla stock updates.